Hey everyone, Mauricio here, legal advisor to McElroy.com, and today wanted to talk to you guys about the top 6 questions you should ask every deal sponsor before you invest in one of their deals. As a real estate syndication attorney, we do about 300 of these every single year, and one of the most common questions I get is, Mauricio, what should a passive investor ask the sponsor prior to investing? And so I came up with a couple of these questions. There's actually about 10 of them, and so we're going to put a link in the video if you want to get the other 10. But here are the top 6 that you should absolutely consider. Number 1, what is the level of the deal sponsor's experience and track record? You know, ask any sophisticated investor, and that's probably the number 1 thing you should be asking your syndicator and really doing your deep dive into the due diligence is what is the level of experience? Anybody can put together a fancy brochure, a fancy business plan, but can they actually execute on that business plan? That is what you're really interested in. And it gets really nuanced if you really think about it, because not only are you interested as whether they have experience and whether they have a track record, but do they have experience in the particular asset class that this particular deal is involved? So for example, maybe you have a sponsor who's have a great experience and great track record on multifamily investments, for example, and they've purchased a lot of multifamily buildings, but this particular deal might be on self-storage or mobile home parks. So do they have experience and track record in those asset classes? Now, it doesn't mean that that particular person that you're talking about needs to have that experience, but somebody on their team really needs to have the very little nitty-gritty experience on the asset class, and ideally even the sub-market that the property is in, because just because this syndicator has been in, let's say, the Florida market, if this investment is in Oklahoma, you want to know what their level of expertise and track record is in the state of Oklahoma. So just think of questions you should ask like, do you have any experience in this particular sub-market? Have you taken any of these deals full cycle? And have you gone through like a really big downturn like in 2008? So again, spend most of your time trying to figure out what the level of experience is and just ask yourself whether they can actually execute on the pretty brochure. Question number 2, what is the level of experience and track record of the asset management team? Now, some of you may be surprised to learn that the sponsor and the asset management team sometimes are 2 different groups. The person that you're dealing with, the sponsor, the person that you know, like, and trust and have the relationship with, they may not be involved in the day-to-day operations once the raise has been complete and the property has been closed on. So it's really important to figure out who is actually doing the work, who is actually executing on that business plan to make sure that the person that you're relying on is actually involved, because it's not uncommon these days with so many sponsors that some sponsors tend to sort of fade away after the deal is closed and you don't get to see them as often. So ask specifically who is going to be asset managing, what roles does everybody on the team have, and make sure that the person that you know, like, and trust is part of the asset management team. Question number 3, what is the sponsor's investment philosophy? You want to make sure that your investment philosophy is aligned with the investment philosophy of the sponsor, because this may be a great deal, it might have all the bells and whistles from everybody else, but if you're a cash flow investor and what's most important for you and your philosophy is you want to have monthly cash flow, consistent monthly cash flow, and this particular deal is a heavy value add, you're not going to see cash flow for a while, or maybe it's a ground up development, so you're not going to see cash flow for 18 to 24 months, then your investment philosophies are not aligned. And so that's one of the questions you want to be digging into is what are they really looking for? Are they conservative? Are they aggressive? Are they cash flow investors? Are they equity investors? Make sure that there's an alignment between your investment philosophy and theirs. Question number 4, what happens if the sponsor dies? This is obviously a bigger deal if you have one sponsor, which many of the syndications are, so you want to make sure that whoever you're entrusting your money with, the person that you know, like, and trust, what happens if they pass away? But even if there's multiple investors, if the main syndicator passes away, what's the game plan? Because the last thing you want to do is have their interest in the syndication and their controlling interest in the syndication pass to their estate plan, and suddenly their spouse or their kids end up owning that percentage ownership of the deal and may have a controlling interest, and they may have completely different expectations or desires than you have, and they may just want to liquidate, and they may just want to get out, and they may want to just get their money back. So make sure that the sponsor can articulate a succession plan in the event that they die or even become incapacitated. Most sponsors will have in their agreements, they'll have what's called a buy-sell agreement, which outlines what happens if one sponsor dies, everybody else can buy their interest, but somebody's going to take over a controlling interest, and it's really important for you to find out who those individuals are and whether you're comfortable with that, or if nothing else, that there's actually a plan in place, because a lot of times syndicators don't really have a plan in place, and what happens when they die, as I mentioned before, their kids or their spouse take over the project, which I'm sure is not what you want. Question number 5, how does a sponsor fees compare with the industry average, and do they have their own money in the deal? This primarily has to do with alignment. Again, you want to make sure that the syndicator's goals and results are aligned with yours, and so you want to have a fee structure that actually encourages them for the project to succeed, right? So fees generally are paid in different parts of the syndication. A lot of them are up front, right? Prior to the deal, when you're raising capital, there's some fees there. There's some fees ongoing during the life of the investment, from cash flow or some asset management fees, and then there's fees at the end. It's okay to have fees on all three, but you want to be wary about fees that are front-loaded, right? Because if they're going to get most of their money up front, they have very little incentive to do well for the project, as opposed to, let's say, everything's backloaded where they're not going to get paid unless the project is super successful. Now, again, I'm not saying that every syndicator has to get paid at the end. You want to make sure your syndicator is motivated to get up in the morning and go to work and get a return for you. So you want to have fees in there built in, but you want to pay close attention to them, make sure they're within the industry average, and you want to make sure that they're not front-ended so that your interests and their interests are not aligned. And maybe just as important is whether they have their own money in the deal. Again, it has to do with alignment, but if they've got skin in the game, if they've got $200,000, $300,000, $400,000 in the deal, then obviously they've got a vested interest in making sure that the deal goes through and is successful, as opposed to, hey, no skin in the game, I've got all my fees up front, I don't care if this deal goes belly up. You want to make sure both you and the sponsors, you are both aligned. And finally, number 6, ask the sponsor what they believe is the worst case scenario for this particular investment and how they plan to mitigate that worst case scenario. You're looking for the weakest link. Like, how does this thing actually collapse? Ideally, you go through, do your due diligence on the project, and you should be able to find out what the weakest link in the deal is and what the worst case scenario is, so that when you ask the sponsor what they believe it is, you already have an answer, and hopefully you guys are either coming up with the same answer, so it's confirming your due diligence, or maybe they're going to come up with something else that you hadn't really thought about. But if the answer or the response to your question is there are no worst case scenarios, or we've thought about everything, or we don't know, you get a blank stare from the sponsor, that's going to be a red flag. Every single sponsor worth their weight in gold will be able to tell you exactly what the weakest link is in this project, what the worst case scenario is, and what steps they've taken to mitigate that worst case scenario.